What Nio just did is insane. Nio, 3 days until. Curious about the Nio Stock news? What's new in the stock market? Any good or bad news regarding the investment you might make for the stocks you're interested in? If you're interested in stocks and then to Nio Stock, well, you're at the right place. Nio, the Chinese electric vehicle maker stocks, were climbing significantly at the beginning of the week as demand for electric vehicles appear to be rebounding following the disruptions caused by COVID lockdowns in the economy of the world's second largest country. The announcement contributed to a rise in the price of Tesla shares. Well, for all the new stock followers, we have good news for you. So don't go anywhere because this video is going to be so useful for you. Welcome back to Stock Market News. We are going to share with you each and everything happening in Nio, so let's directly dive into the video. A large amount of pressure has been put on Nio shares as a result of the sell-off in the stock market, as well as the possibility that Nio shares would be delisted from exchanges in the United States. Nio's position was not helped by the fact that a big stakeholder, the Norges Bank, the central bank of Norway, apparently sold its entire investment in the electric vehicle manufacturer during the previous quarter, as stated in a regulatory report which was submitted on May 9th. Then why has Nio been still such a buzz? Thus, when a website headquartered in China that focuses on new energy vehicles announced a development this morning that seems crucial to Nio's future, the market was eager to scoop up some shares of the electric car manufacturer, particularly following the slump. The reports are also in favor of Nio. According to a story that was published by CNEV Post this morning, Nio has reportedly inked a deal with an industrial development zone in Hefei, China, to establish a facility for the new mid to high-end brand that Nio aims to introduce. According to CNEV Post, the facility is projected to be finished in 2024, at which point it's anticipated that manufacturing would begin. The story went on to state that Nio's new brand will compete with companies such as Tesla and Volkswagen, and it mentioned that Nio's first sub-brand items are already in the critical development phases. This is quite significant since it validates Nio's intention to develop a brand aimed at the mass market, which is something the business has frequently discussed. Nio CEO William Li even elaborated on the matter during the company's fourth quarter earnings conference call, explaining how the company will not launch vehicles with large price gaps as Tesla has done in the past. Instead, the company will focus on a price range of $30,000 to $50,000 a car to appeal to the general public. Nio has said on several occasions that one of its goals is to develop inexpensive electric vehicles for the public that are also superior to Tesla's vehicles. Nobody knows for sure if and how Nio vehicles will be able to defeat Tesla, but if the most recent article from CNEV Post is accurate, Nio appears to be on the right track to achieving its objective. When the firm decides to formally reveal any success on its mass market brand front, I wouldn't be shocked to see Nio shares climb, and when that occurs, investors who are panic selling Nio shares now may look back and regret their decision. Nio, an electric vehicle manufacturer located in China, has seen its share price increase by 8.29% over the past week and even more over the past month. Over the past month, the value of Nio American Depositary Shares, or ADSs, has increased by more than 38%. This includes having yet another productive day today, with shares having increased by 5% as of 12:19 p.m. Eastern Time. After the firm revealed this week that it will be launching its ES7 SUV, today's increase reflects sustained strong confidence in the market. Nio has made significant headway on several innovative vehicle projects in recent times. A little more than a month ago, it started delivering the company's flagship smart premium automobile to customers. Out of the total 7,024 vehicles that were sent during May, the business delivered more than 1,700 ET7s. In the latter part of this year, the business plans to begin shipping its new ET5 midsize car, and just this week, they revealed they'll be producing a new SUV. What's the buzz regarding Nio now? Do you have any idea about it? If yes, well, just pause this video and let me know in the comments. Well, the buzz got Nio's new ES7 sports utility vehicle introduced to the public on Wednesday during the company's product launch event. The ES7 is Nio's fourth utility vehicle overall and is classified as mid-large. Using the new NT2 platform, the business is marketing it as an option that is more technologically sophisticated than either of its SUV models, the ES6 or ES8. The most recent iteration of Nio's autonomous driving technology, which extends beyond highways to urban areas and parking lots, as well as the company's battery changing service, is also included. It also has the company's quickest acceleration for an SUV to date, going from 0 to 60 miles per hour in around 3.9 seconds. The interruptions and lockdowns in the supply chain that were caused by COVID have affected Nio and have harmed consumer spending. However, it showed signs of improvement in May, with a significant rise in deliveries as compared to April's numbers. Investors appear to be seeking to get into the stock ahead of those results, although the firm has stated that it continues to expect to further ramp up the production capacity to a greater level. According to one analyst, the present price of Nio stock is enough. He joined the chorus of colleagues who urged for investing in the Chinese electric car company. As a result, worldwide demand for electric cars is skyrocketing, and China has emerged as the world's fastest-growing EV market. This suggests that Chinese electric car makers such as Nio have a huge chance for growth. The likelihood that the U.S. may impose sanctions on China if it gives any type of help to Russia, as well as the chance that Chinese shares will be delisted from trading in the U.S., are two of the most serious dangers to China in recent days. The latter in particular drove Nio shares lower, especially after the Securities and Exchange Commission listed and reprimanded 5 Chinese corporations the previous week for failing to comply with its audit rules. This occurred when the SEC identified and warned the corporations. Nio even went as far as to list its shares on Hong Kong exchanges on March 10th to give investors an alternative trading venue if its stock was delisted from U.S. platforms. According to recent Chinese media reports, China is apparently in talks with U.S. regulatory organizations to avoid delisting. According to Chinese media, President Xi Jinping emphasized that wars like the one in Ukraine are in no one's best interest. This is a remarkable new development. This morning, President Joe Biden and President Xi Jinping are holding talks. While the S&P 500 and Dow Jones Industrial Average futures were both down about 0.4%, Nio stock was up more than 4% in early trade. Companies have experienced huge losses as a result of China's zero-tolerance COVID policy, which has obliged them to lock down their operations overnight for several years. Nio investors were concerned about the likelihood of a production delay as a result of the company being compelled to halt operations due to lockdowns at a time when it is striving to expand capacity. This country is now experiencing its worst pandemic to date. What you need to know about Nio is that Nio has ambitious growth targets for 2022, but a lot depends on macroeconomic factors. Investors appear to be buying Nio stock at a time when it is still significantly cheaper than it was at its peak. Today's events appear to indicate a potential alleviation of at least some of the issues that have been weighing on the corporation. Citi has set a price objective of $87 on Nio Inc. shares. Citi analyst Jeff Chung maintains a buy recommendation on the stock. Chung lowered his rating while noting that Nio's first quarter revenue was lower than expected owing to sales mix adjustments, asymmetric battery costs, and car pricing increases. However, due to successful cost cutting, the net loss was reduced quarter over quarter. Chung has also mentioned that Nio provided a very aggressive June sales projection limit of 13,000 units, or 84% month-over-month increase, implying that quarterly volume may reach 40,000 units. As a consequence, Chung feels that the first quarter performance is neutral to slightly positive. What do you feel about the Nio stock? Is it a long-term investment that's worth it? Do tell us in the comments section below. The video for today has finally reached its end. Please make sure you hit that like button as well as the subscribe button so we can continue to generate more material that includes information and updates on Nio stock. And thank you for watching. Till then, we'll see you in the next one.